The show then by talking about the CPSE ETF, which is managed by Reliance Mutual Fund, and that opens today, getting anchor bids of about 5,700 crore rupees versus 750 crore rupees on offer. To chat a little bit more about the investment rationale, what has been the participation and what has led to this massive oversubscription is Sundeep Sikka, ED and CEO, Reliance Nippon Life Asset Management. Lovely having you with us on the show, Sundeep. Great response, and the third tranche opening for retail investors and pension funds today, which will be open till day after. But FIIs and institutions have already put in bids worth 5,700 crores. What really do you think is driving the 7.5 times oversubscription?
I think firstly we're really happy with the kind of response we have got from institutional investors, especially both domestic and foreign institutions. I think what you need to keep in mind is, I think while we have received 5,700 crores against a green shoe option of 750 crores, this is at the backdrop. The last month also we had come with the earlier tranche where we had raised about 13,000 crores. I think this clearly talks about the India growth story, the confidence the investors have in the India growth story. And I think we've been talking to a lot of investors, both domestic and international. I think this is just the beginning. And the kind of response that we have got also demonstrates the confidence these investors have in the government companies, the government sector. And clearly, if you were to look at this, the underlying stocks are some of the best stocks in the respective industries. And the issue opens today for retail, and we expect the retail response to be even better than what we saw last time.
Yeah, what are you expecting from the participation within the retail base of investors? Because, Sundeep, like you pointed out, I think the premise for a second issuance of the CPSE PSU ETF is really the kind of resounding performance the first product experienced. And, it's pretty much laid ground for more such innovative ETF-based products coming in. Do you think retail investors would take to the investment of the second tranche or the second offering? Because even from from a point of view of the fees that's associated in being a part of such a product is much lower than mutual funds, whereas you're banking on some very marquee PSU names which have been rewarding to investors for decades.
No, you're right. When you look at this, over the last 1 year, the CPSE ETF, the benchmark, has given a return of about 55% compared to a Nifty of about 25%. And these are really marquee names, high quality companies, and investors have been benefiting. And this ETF has been in existence for nearly about 4 years now. And across time period, whether you see last 4 years, 1 year, 3 months, these companies have been doing very well. And this gets further, added by the fact that I think today, these companies are gaining dominance in their respective industries. Even if you look on any parameters on the fundamentals, you look at the PE, these companies are available at 11 times compared to the Nifty at 25 times. On a dividend yield also, this basket has a dividend yield of nearly about 4% compared to a Nifty of 1.5%. So these are very high quality companies. So two things which are driving the retail flows into this ETF have been the maturing of the retail investors. We've been seeing a lot of investors today. They've been appreciating past performance. They've been I think they've been sitting on the bench fences for a long time. And I think clearly till now in ETFs, which were more an institutional play, when you compare this, the last ETF which we had last month, we saw almost 300,000 new investors come into the ETF industry, which was one of the highest, which technically, for all practical purposes, double the base of the ETFs. And I think we believe, going forward also, investors will keep appreciating ETFs, will keep coming to ETFs and high quality ETFs like these. And like as I mentioned last time also, and this is at the starting, I believe this is helping two things, and it's helping the government for the disinvestment program, and is also helping the financial inclusion that government wants, trying to take, getting this culture of equity into the small cities and towns, because we saw 300,000 investors coming from a lot of small cities. And this time also, I believe the response is going to be almost similar.
Well, that's interesting, Sundeep. Also, the fact that you're going to be looking at more such products being doled out, I would imagine, given the response that the second offering has witnessed, the performance of the first offering. Are there going to be more permutations and combinations explored in terms of maybe a PSU bank ETF, around the whole state-run segment of the market?
Yes, right. The way we see this, I mean, this is again, I mean, while this is one CPSE ETF, I mean, this is going to also, I think the Indian ETF industry is going to change. We have already seen at Reliance, we have multiple ETFs. We have a banking ETF, PSU bank ETF, consumption story, consumption ETF. I think what will drive this change is if you see globally also, everywhere things have moved from active to passive. We believe in India, we need to give options and more choice to the investors. While there will be a lot of active funds, we at Reliance have taken this that I think we want to offer a complete bouquet of ETFs, various ETFs to investors. And I think one of the biggest advantage of ETFs, which has helped a lot of investors across the world, has been, and that many times when the markets mature, when the economies mature, to create the kind of alpha that has been created in emerging markets become difficult, and the low cost also adds to the advantage. We clearly see a trend in India also. While there will be new thematic ETFs which will come, active ETFs will come, synthetic ETFs will come, but we also clearly see low cost ETFs will challenge a lot of large cap funds. I mean, today average ETFs are charging anything between 20 to 40 basis point fees compared to a large cap fund could be 200 basis point. So once the creation of alpha becomes difficult, cost is going to work to the investor's advantage. And we believe, I think the CPSE ETF, like I mentioned earlier, while it's helping the government for their disinvestment, but is also changing the way Indians have been looking at ETFs.
And finally, Sundeep, can you just tell us how do you really see the environment as well for ETFs taking place? What exactly is the growth plan going forward? Just stretching the point forward that my colleague was making. Any follow-up, any more tranches that we could see as part of the government's divestment plan?
No, I think clearly if you were to see, government has an aggressive disinvestment target of about 75,000 crores this year. And if you see the last 2 months, about 20,000 crores has been raised through this. I think has been mobilized, while I think the government could only take about 8,500. I believe, seeing the success of this, there will be many more ETFs coming up, and I'm sure, whether it's going to be this or with some permutation combinations, I think our understanding from the government is they are open, and this will be one of the most preferred routes to disinvest going forward. I think I'd like to really compliment the DPM, the Disinvestment Ministry. I think the way they've been driving this, because this is today a very, very innovative way of disinvestment, which has been done with very few countries in the world. And I think I'll clearly see, next year this target of 75,000 crores, I see a majority of this money being raised to the ETF route. And I think Reliance will be very happy to contribute more to it.
No, definitely, and you're bullish on the product. That's pretty evident with how you're marketing the second ETF offering from CPSE. But, just before we wrap up, Sundeep, just a few days back, I met a retail investor who was very keen on understanding the ETF market. So how do you see the environment changing or evolving to get more retail investors to invest in the ETF product? Are you going to be looking at creating more awareness and building the product portfolio by itself? I know you've spoken about the plans that you have about various products coming into the market, but there's a fair amount of inquisitiveness and understanding how ETFs work compared to an active mutual fund portfolio. So how do you see the environment evolving and you taking advantage of that in due course?
No, I think I'll just recorrect here. I think it's not that we're taking advantage. I think we believe at Reliance, I think we'll be driving this change. I think, see, the way you have to see this is that India today has just 2% participation in the capital markets. This includes all, whether you call direct stocks, whether it's to do with, mutual funds. And what we have seen is, I think, till now, I think majority of the investors who've been investing to whether through buying direct stocks, or through mutual funds, I think there's another vehicle that needs to be made available for them to come into capital markets. Let's take you talked about earlier in the day, you talked about PSU ETF or a banking ETF. There is a very high possibility of an individual investor, a retail investor going wrong in identifying their stock. So our objective will be to keep offering, coming out with simple products, taking it to the retail investors through the broking system in India, which has evolved very well through BSE and NSE. And I think we clearly believe, I think this is just the starting. And one of the reasons 2 years back when we had gone for this acquisition of Goldman Sachs Asset Management Company, I think that was primarily backed on this belief that going forward in India, ETFs will be a very big thing. And I think I hold my, if I go back to what I mentioned at that time when we acquired Goldman, I said, I think ETFs have not taken off in India, but it's just a matter of time. In the last 3 years, actually, if you see, the market has doubled. Pension funds have started investing in it. ETF is much more palatable word now compared to what it was 2-3 years back. And I would say, I think the change, I think the entire ecosystem will change very soon. It will change faster than what we expect. And in the next 3 to 5 years' time, we'll say ETFs giving a tough time to the active funds also.
All right, Sundeep, we leave it at that. I wish you all the best with this product offering. Thanks very much for joining us and outlining the objectives of the CPSE PSU ETF. The second offering coming in from Reliance Asset Management. Let's see how retail investors take to the product. Like Sundeep pointed out,